Hey guys, this is Chelsea Anderson with the Anderson Signature team at Keller Williams Realty Phoenix. I actually have a pretty good market update for you to talk about a couple key factors that we watch every day all across all of our markets. This one's going to focus on our Southeast Valley, so Mesa, Chandler, and then Gilbert. So just wanted to run through a couple of these things and hopefully these charts and graphs that we're going to show you make a lot of sense. If it doesn't, please feel free to ask questions. We're going to try to go through it in a way that's easy to understand. So you can see right here, this is the area that we're focusing on, Mesa, Chandler, and Gilbert. This is kind of lovingly referred to as the Southeast Valley in the Phoenix metro area. What we really want to start with is our Cromford Market Index. So this is a chart that measures the level of the supply of the market, meaning the number of homes that are for sale and the number of buyers that are out there putting offers on these homes. So what we want is those two to come together. If they're together, that means it's a balanced market. If they're apart, depending on which one is up or down, that's then going to direct us into either a seller's market or tell us that we're in a buyer's market. So right here with our supply index higher than our buyer index, that indicates that we're in a buyer's market overall. So the blue line is the supply and the red line is the buyer side. So you can also see kind of that yellow shaded line. That's the balanced area where we'd like to see that the market either has enough homes that are for sale to meet the demand and the demand is there, kind of like our normal range. So you can kind of see our demand is actually just a touch below normal and our supply has kind of been hanging out in that normal range. So when we break that down and we start going into the cities, we're looking at Chandler first. Chandler's market index, that same meter, is 155, just shy of 55 points today. So what that tells us is that is a measure, again, of the buyers. The demand is the buyers, and then the homes that are available as the sellers in the supply index. So 100-ish is balanced. Anything over 110 is a seller's market. Anything under 90 is a buyer's market. So when we're looking at the Southeast Valley right here specifically, Chandler is actually a decent little seller's market there. It is not as strong as we've seen. You can see the different years there. We are doing better than last year in 2025. But we still have a little bit of a ways to go to get to 2024. And you can see from 2021, the crazy levels that we saw during our COVID market. So our supply is actually a little bit lower than it should be in Chandler at 59. And our demand is right about normal. We're a little bit low for where we want to see. 100 is going to be, where we ideally want it. And at 91, we're not bad. So when we look at Gilbert then, that market is only measuring at 120. So you can kind of see the difference. Gilbert's moving a little bit slower than Chandler. There's more homes that are available. Their supply index at 70. It's still a lower supply market. And then that demand index is lower as well. It's not all the way back to where we saw Chandler with the pretty decent buyer demand index. So again, you can see we're just a touch above 2025, but we're still a little ways below 2024 and 2023 and quite a bit below COVID. It's going to be a very similar story for Mesa. Mesa is only measuring at 119. It's going to be a lot more of our seasonal snowbirds. There's a lot more 55 plus communities. It's a little bit different market and it's a lot bigger city than Gilbert or Chandler. So there's a lot more different product types, different demographic types, things like that. Mesa has different housing types, different product types, things like that. And again, this is a whole measure of the entire market. So Mesa at 119, the supply index today is at 72, and then the demand is at 87. So again, demand's just a little bit below where we want to see it, but our supply is also there too. So they're, kind of weak, just a touch better than balance. But not a super strong seller's market in Mesa there. So when we dive back in, we're going to look at our active inventory and then we're going to look at our pending contracts. And we're also going to look at what that median price point is right now. So in Chandler, you can see our active inventory has actually gone down. It's down almost 12% year over year. So from the same time last year to now, there's 12% fewer homes available on the market. It's only sitting at 663. In the last few weeks, it's actually been declining. So, nothing really to worry about there yet. There's still 663 available properties to go take a look at. And then when we go one more down in here to the number of pending contracts are up 5% year over year. So that's good. That means the trajectory is headed in the right direction. Buyers are coming out of the woodwork. They're putting offers on homes. And it's looking like there's about a 2-month supply of homes available in Chandler right now with 340 homes that are under contract. So we're doing better than a lot of the years. As far as the number of contracts go, we're better than 2025 right now, 2024 and 2023 in Chandler. Once we get into COVID years again, 2021, 2022, we're not to those same levels for this year in type of the year at the end of April. But we're doing okay in Chandler. We're doing pretty good. When we go into the median sales price for the end of quarter one, we actually wound up at $560,000. So the cheapest homes that we're looking at, and this is just for single family homes, the cheapest homes that we were looking at in Chandler that sold were $225,000 all the way up to $2.5 million. So there is a lot of different types of properties that are selling, a lot of variations in sizes and things like that. But the midpoint of the market there in Chandler for the first quarter was $560,000. So we're still below where that peak was quarter two of 2022. But we've kind of been holding steady right in line there. So if we dive into Gilbert for our active inventory, we have 816 available properties today, and the gap has been spreading between this year and 2025 and those active properties. So we're actually down 5% year over year right now, which again is good. We don't ever want those listing numbers to start surging. So then when we go to our pending contracts, our contracts are up 3.4% year over year. So it's not quite keeping up at the same pace as Chandler, but it's still headed in a good direction. We're still beating out a couple of 2025 and 2024, a couple of the more recent years, but we still have a little bit of room to go there in our Gilbert contracts. And then as far as our median sales price, again, in Gilbert, it's $589,000, but it's been largely flat. So again, you'll see this very similar story. Second quarter of 2022, prices spiked and then came down and then have leveled out. So the cheapest house that sold for first quarter in Gilbert was $330,000, with the most expensive being at almost $3.9 million. So then if we dive into Mesa, our active inventory, in here where you can see the big difference between the size of Chandler, Gilbert, and then Mesa. Mesa has 1,949 active properties available today. Again, there's a 7% gap between last year and here, so that's good. Those inventory levels have kind of come down a little bit, and our pending contracts are up 10%, which is great. We really do want to see those contracts start gaining that momentum as these interest rates have kind of stabilized, all of that. So we're looking better than 2025, and we're kind of right in line with where we were in 24, 23 right now. So that is good. We like to see that type of stuff change. As far as the median sales price, again, spike in second quarter 22 and then leveling off. But the median here in Mesa is $489, so almost $100,000 less than Gilbert that we were just talking about. So the cheapest house that sold so far this year is $100,000. And the most expensive in Mesa that is sold is $2.9. So you can kind of see the gaps and the shifting there. A couple of other key factors that we watch are going to be the seller paid concessions to the buyer. So that is money that, say, we're going to give a real life example here. Say a house is $500,000, but with that offer that you get at $500,000, the buyer's actually asking you to cover about $10,000 in their costs. So that net offer then is going to be 500 minus 10 at 490. So some of these prices are staying very stable as this concession line has grown. So I think it's about 3 years or so where every month overall on the entire market, the median concession is sitting right about $10,000. So far this year, the Chandler median concession is $9,950, where Gilbert is $10,500, and Mesa is actually $8,940. So a couple of, people get a little bit confused on what concessions are, but that's really money that the buyer is asking the seller to cover that goes towards either rate buy downs, loan origination fees, prepaids, which would be like insurance and things like that you have to pay at closing to fluff accounts, fluff impound accounts or escrow accounts for your mortgage. They're going to cover your title fees, your title insurance policy, things like that. And so we're getting all of that stuff, and it's more of a cash savings to the buyer rather than really, diving in and pushing harder on purchase prices. So again, we're seeing a lot of these prices stay very, very level, but some of these other things are getting a little bit wiggly. So then just kind of a frame of reference with all of the zip codes that are going on in the East Valley, I just wanted to really zero in on where are the hot pockets for single family homes, where are the coldest areas for single family homes, and then do the same thing for you for condos. So our hottest single family zip codes, the hottest is 85202, which is going to be in West Mesa. Then the next one is going to be 85224, which is going to be in Chandler, kind of, 101 to Arizona Ave, and then not quite, maybe like Elliott south to the 202, that kind of in that area. 85204 in Mesa is going to be our third hottest zip code, and then 85225 in Chandler is going to be our fourth. The coldest is actually Northwest Mesa at 85201. So kind of interesting. All the green stuff then, when you're looking at the map, is balanced. Anything that's kind of a warmer tone, the yellow, oranges, reds, those are where things are a little bit hotter. Then if we switch to condos, the hottest zip codes there are going to be down south. So 85249, which is going to be South Chandler, 85286, which is going to be down there as well, 85295, which is going to be in Gilbert, and then 85233, which is going to be kind of around where like the Islands is and up like that. The coldest zip code's going to be in Mesa, 85203, and then South Gilbert, 85296 and 85297. So, just kind of interesting to see the different changes when you focus on product type, right? Single family versus condo. Condo markets are a lot slower overall in our entire market right now. It's largely fueled with some HOA battles and HOA fees and rises in those type of costs. So be very careful on which complexes you're looking at and really dive into those finances and make sure that those complexes are doing things the right way. And then with our single family stuff, it's largely driven on price. So if we're under certain price points in the East Valley, those things can fly really, really fast. And if we're over and getting into luxury, it starts to pick out different pockets that are moving faster than others. So if you have questions on things as far as like which price point you're looking in, what part of town, you live in that you're looking to move from or move to, either of those might be behaving a little bit differently. Feel free to ask us questions. We can go into a lot more detailed data, but we really just wanted to dive in and kind of show you the differences and things that we're seeing between Mesa, Gilbert, and Chandler. So any questions, of course, feel free to give us a call, 480-518-9907, or shoot us a message and we will, of course, answer those questions for you. So thanks.